Thank you very much, Chair, and I'd like to welcome Mr Masting and his colleagues here today and to thank you for all of the information which you sent to us in advance, which is really helpful. At the outset, I just want to say that I think it is vital for consumers and the wider economy that the future of permanent TSB is secured. We certainly do not want to concentrate any further power in the hands of the pillar banks. I don't believe that will be in the interest of the economy. We need a viable and competitive permanent TSB as a counterweight to the power of the pillar banks. And that said, Mr Masling, my first question is, when do you expect that the bank will become profitable again?
Deputy, good afternoon. Thank you for your kind words and your supportive words. They'll mean a lot to my staff. In terms of the turnaround journey that we are on, I would expect the bank to be profitable at the back end of 2016. Potentially earlier if the economy obviously keeps growing at the rate it is.
Okay, so just moving to the recent stress tests and the capital requirement that you now have, you have said that 80% of the €855 million shortfall under the adverse scenario has now been provided for. So can you confirm the amount of the shortfall? It's in the region of 150 to 200 million. Is that the case?
Yes, Deputy. Perhaps I'll give you the full transparent detail and then I've answered your question. So we started with 855 million gross. We have a contingent convertible vehicle in our balance sheet worth 400 million. So that takes us down to 455. Of that 455, we think circa 80% of that has been covered. So directionally, we'd expect that the net shortfall will be between 100 and 150 million euros, depending on the final negotiations with the European Central Bank.
Okay. The 400 million contingent convertible capital note, when would that have fallen due for repayment at the stage?
It's due to be repaid in July 2016.
Okay, so you are now counting that towards the overall...
In an accounting sense, we're counting it, yes, that's correct.
Okay, so you're looking for 100 to 150 million.
Yes.
You're touring the markets, you have met potential investors, and you have said there is interest in the bank story. I suppose the question is, how much of the bank is potentially up for grabs? What percentage stake in the bank are you looking to potentially dispose of in order to raise the 100 to 150 million? Are you looking to raise more than the minimum required?
Perhaps if I explain what I think the steps are going to be, that will just help answer the question. We were in London, New York and Boston on what you would call a pre-deal roadshow. Essentially, the market is very aware of AIB and BOI. They have a lot more capital market interaction than we do. Really, our last capital market interaction was under the guise of Irish Life and Permanent. And so the first stage was really about telling our story. It was about introductions. I can confirm to the Deputy that deal structures, pricing, shareholdings were not discussed at those meetings.
Okay.
What I'm trying to gauge is the level of interest from the capital market community. And therefore, I wouldn't expect to make a public comment about the shape of the deal probably until the end of quarter 1 2015.
Okay. You have until when to finalise it?
9 months from October the 26th, so July, end of July 2015.
Okay, well, clearly potential investors will try to get the maximum stake in the bank for as little money as possible. That's the nature of what they do, and I will just put my own concern on the record, and I don't expect you to respond, but I wouldn't like to see the state's shareholding in Permanent TSB significantly diluted as a result of the investment that you're now seeking. The state, as you have stated, has put in €2.7 billion in net terms, and so the final shape of the capital capital plan for the bank must, in my view, protect the integrity of the state's investment in permanent TSB. Well, that's a matter between yourself and the shareholder, but I would just put that on the record as an opinion. If I can move on to the issue of interest rates, Mr. Masling, and the standard variable interest rates that you're charging, which, despite the reduction of, when was it, a couple of years ago at this stage maybe, you're still at the high end. For an LTV of between 80 and 90%, a new mortgage has a gross rate of 4.59%. You have 79,000 standard variable customers in different LTV brackets, presumably. I suppose I'm asking you for your reaction to the decision of AIB to reduce their rate. Their comparable rate, for example, for an LTV of over 80% is now 4.25, which is significantly less than your rate. Are you reviewing your rates in light of that? Where does the bank currently stand?
Thank you, Deputy. It would be inappropriate for me to comment on the pricing decisions of competitors. We keep our rates under consistent review. I would not wish to insult you with a bland answer, so let me just build on that. Just some facts for you. Our blended cost of funds is 178 basis points. For example, if you looked at Bank of Ireland's, which I looked at last week from the transcript, it's 115 basis points. So, by definition, we need to work to a lower cost of funds, but that will take us time. You will no doubt understand that we still have to work through the legacy issues. At one stage, we had a loan-to-deposit ratio in the past of 241%. So you'll understand that it's just going to take us time to bring the cost of funds down. So cost of funds is the first thing I would say. Of course, the cost of funds doesn't include the cost of running the bank, the cost of risk, or the cost of capital, all of which we have to cover to make the bank viable and profitable. The last thing I would say on a blended rate across the whole group, our NIM is 88 basis points. So we still have a significant mountain to climb. So I'm absolutely conscious that we must be competitive. I hope that that has been a hallmark of this team, and as you rightly said, was reflected in our early decision to reduce our variable rates unilaterally when I first started, when we were a significant outlier. What I can say is that we'll continue to monitor rates closely and do all we can to reduce our cost of funds, increase our net interest margin, run an efficient business. And then ultimately, if I'm able to do that, we'll be able to reduce our variable rates where possible. But today I can't give you any guarantee of when that will happen.
Yeah, I hear what you're saying, Mr. Masling, and I accept your bank is in a different position to some of the other banks in that you're still losing money and you have to become profitable, but you also have to compete, and that is the nature of the market. And a young person or a young couple looking to buy a home today and take out a mortgage is going to look for the best rate they can. So if you want to increase your share of the mortgage market for new entrants, then I think you are going to have to move. And
yeah, I respect your perspective on price, and as I say, we will keep our rates absolutely under constant review. What I would say would be that I hope that price isn't the only factor in determining who one banks with. I hope that we provide a level of banking professionalism and service which is also attractive to customers. So please don't take my comments that I am disagreeing with you. I agree with you. We need to keep our rates possible, but I would say that I hope permanent TSB is more than just price.
Okay. The last question I want to raise in my limited time is about the mortgage arrears situation. And the last time that you were before the committee here in April, I think it was Mr. O'Sullivan said the bank expects to repossess between 2,000 and 4,000 homes, mainly buy-to-lets, but some family homes as well. Now, looking at the numbers on page 5 and page 8 of the presentation you gave to us, you've over 6,200 principal private residences where the loss of the home is now a very real prospect. Assisted voluntary sale, voluntary surrender, legal action underway, and you have 1,800 buy-to-let properties in the same category. So that's coming up to over 8,000 homes, three-quarters of which are family homes as such, which are now in a very serious situation where there is either agreement for the home to be surrendered or where it is essentially before the court. That seems to be a very significant jump from where you expected to be just a number of months ago when you were before the committee.
Let me give you some perspective, and then I'll hand over to Shane, and he can build it with some operational expertise. As I have detailed to the committee in the past, we have had to build our arrears management function from scratch because the competence in the organisation was at best suboptimal. I believe that we now have a best-in-class retail arrears management function. We have nearly 300 people working with best-in-class technology. I think a really innovative set of potential treatments. And what I can assure our Deputy and your colleagues, that every customer who engages with us goes through a detailed review of income and expenditure. Our starting point position is to try and keep people in a home. We have two phrases we use, sustainability and affordability, and they are drilled into our staff. Sadly, there are times where, unfortunately, we can't find a solution. And we will continue to do everything we can to work with our customers to find the right solution. But as I say, sadly, that isn't always the case.